is one of those where everything is moving at the same time. We are seeing major shifts across geopolitics, AI, markets, and crypto, and all of it is starting to connect in a way that really matters for where things go next. So, if you're trying to understand what's actually driving markets right now, this is a show you want to stay for. Let's start with a story that's not about market, but could easily become one of the most talked about case. Of course, we're talking about Charlie Kirk. We are now seeing a new twist in such a high-profile murder case where key evidence is now being questioned. What once looks like a very straightforward case is starting to become more uncertain. The defense is now saying the bullet does not match the weapon linked to the suspect, and that is a big deal because in cases like this, everything depends on connecting the weapon to the outcome. At the same time, DNA evidence is becoming more complex with multiple samples involved. And on top of that, there are tens of thousands of files that still need to be reviewed. So, what we are seeing here is a case shifting from something that looked clear into something that may be contested. And in court, even small doubt can change everything. Now, from legal uncertainty, let's move into one of the biggest shifts happening in tech right now. The AI race is changing and is no longer about chatbots. For the past 2 years, the focus has been on general AI tools, but now companies, especially in China, are moving towards something much more practical. They are building AI for real industries. AI that handles finance, logistics, manufacturing. So not just generating text, but actually doing the work. And that's a big shift because now the question is no longer how smart is the model, is can this AI actually generate revenue? This is where AI moves from hype into real economic impact. And the companies that get this right could end up owning the entire industry. At the same time, we are watching something much bigger on the global stage. The situation between the US and Iran is still escalating, and this is no longer just a headline. It's now affecting oil, it's affecting inflation, and of course, the entire global market. We are seeing military positioning increase and more pressure around the Strait of Hormuz, of course, one of the most important oil routes in the world. And this is where things start to matter for the market because if the situation escalates further, oil prices could rise again. That brings inflation back into the picture, and suddenly central banks may not be able to ease as quickly as markets hope. So, we are watching here is not just a conflict, it's a potential macro trigger that could reshape how markets behave in the coming months. Now, while all this is happening, something very important is quietly happening in the background. So, Wall Street is right now moving on chain. Within just such a short period of time, major players like Nasdaq, like New York Stock Exchange, and CME Group have all made moves into tokenization. And this is not only about crypto hype. This is about infrastructure. They are changing how assets move, how trades settle, and how money flows through the system. Instead of waiting hours and even days, we are moving toward a real-time system. So we're talking about faster settlement, more efficient capital, and completely different financial structure. Most people are not paying attention to this yet, but this could end up being one of the biggest long-term shifts in the market. And then we have something smaller, but still very interesting. A simple post from Elon Musk about Bitcoin went viral almost instantly. Now, on the surface, it doesn't look like much, but when someone like Elon mentions Bitcoin, markets pay attention because this is someone who has moved markets before. And with his upcoming X Money platform, people are starting to ask a bigger question. Could Bitcoin eventually be part of that system? There's no confirmation yet, but the signal alone is enough to get attention. And later in the show, this is the part you definitely want to stay for. We have a special guest joining us today. So Mamadou, who's the founder and CEO of Ubuntu Tribe. Now, this is going to be a very different kind of conversation. We are going to talk about how money actually works in parts of the world that TradFi often overlooks. We'll break down tokenized gold in a very simple way, why it matters, especially for financial assets. We'll also get his take on where gold is heading, how it compares to Bitcoin, and what role tokenization plays in the future of global finance. And most importantly, we'll talk about real world impact, not just theory, not just speculation, but how these technologies are actually being used. So today's show brings together a lot of moving parts. We're talking about legal uncertainty, AI transformation, geopolitical risk, financial infrastructure, and the future of money. And the key idea is this: none of these stories exist on their own anymore. They're starting to connect, and that's exactly why we are breaking down in today's episode. So anyways, point being, there is so much to cover in today's show. So without further ado, let's get started with the first story of today. So we are seeing right now a major shift in the case of Charlie Kirk. Things are starting to change in a weird way. So there's this new court filings is raising serious questions about the evidence in the killing of Charlie Kirk. And the key issues come down to one thing, which is the bullet. So what happened is that according to legal documents, the defense team said the bullet that killed the victim does not match the rifle linked to the suspect. Now, pause for a sec, because this is not a small detail. This is a major issue. The rifle was believed to be one of the strongest pieces of evidence in the case. It was reportedly identified by the suspect's own family and tied directly to the crime. But now the defense is saying even the federal agency, so ATF, was unable to confirm that bullet came from that weapon. So let's break it down simply what is happening in this case. So prosecutors right now, they need to prove the suspect used a specific weapon, and that weapon could cause the fatal injury. So that link basically just broke overnight. The entire case becomes weaker because now the defense can argue the weapon may not be correct. There may be missing evidence, and in court, even a small doubt matters. Now, here's where it becomes very complex. The defense is also raising concerns about DNA evidence. So what they're saying is that multiple DNA samples were found from different individuals, and analyzing is not simple. It requires time, expert review, detailed scientific analysis. So this is no longer a simple investigation. It is becoming highly technical. Now, listen to this. Like the defense team says they have received around 20,000 files, so that include audio recordings and video footage and written documents. That is a massive amount of information. And they are saying this. It will take hundreds of hours just to go through everything properly. Because of this, the defense is now requesting a delay of the preliminary hearing by at least 6 months. Now, step back for a second. At the beginning, this case looked very straightforward. Authorities claimed the suspect traveled to the location, used a rifle, committed the crime, and later admitted involvement. But now, we are seeing uncertainty. The weapon length is being challenged. DNA evidence is complex. The data volume is massive. So instead of a clear case, it is becoming contested case. So let's also understand what the defense is doing right now. They are not trying to prove everything is false. They are trying to show the evidence is not really reliable. The science needs further review. There are gaps in the case. And most importantly, there is reasonable doubt because in court, that is enough. Now, on the other side, prosecutors are still moving forward. They are expected to present forensic reports, witness testimony, digital evidence, and statements tied to the suspect. The argument remains that the suspect planned the act, carried it out, and left behind evidence. So we now have two different narratives. And whenever forensic evidence becomes uncertain, the entire case becomes more intense. So here are what we are watching right now. Like, will the court approve the delay request? What will the full forensic reports review? And how will prosecutors respond to the mismatch claim? The bottom line is this case is now entering a new phase. What once looked clear is now becoming it's being challenged. The evidence is under review, the timeline may be extended, and uncertainty is growing. So the key question is, can the case still be proven clearly in court, or will these new doubts change the outcome? Because in cases like this, the smallest details can change everything. And that's why we are watching very closely here on Roxom TV. All right, so let's shift gears a little bit and let's hop onto the AI race because it is changing again. So for the past 2 years, the focus has always been ChatGPT, LM, general AI tools. But now China is shifting direction, and this next phase could be even more important. So what just happened is that according to a new report, Chinese companies are no longer focused on general AI. Instead, they are moving into industry-specific AI. So that means AI built for law or finance or supply chain or manufacturing. So in other words, not just chatting, not just writing stuff for you, but actually doing real work. Here's the real problem with the current AI. So it is really powerful, of course, but it's still very generic, it's very general. So for businesses, it actually doesn't fully understand regulations. It doesn't handle complex workflows well. It lacks real-world precision. So companies are asking, how do we actually make money from AI? And the answer is a specialization. So let's take a look, for example, in China, one of the AI company like Alibaba, they are building AI tools that can handle international trade, that can process custom paperwork and calculate profit margins automatically. So instead of just giving suggestions, the AI is executing business tasks. So actually imagine this, like you want to launch a product, the AI can find suppliers, it can handle contracts, calculate costs, and manage logistics all for you, all in one system. That is completely different level of AI. Here's where something very interesting. Like Chinese companies are not trying to do everything alone. They actually want to partner with the US, with the US AI companies. That's because US models are strong in reasoning, while China has strong manufacturing and execution. So combining both, you would get better real-world systems. So before they shared, what we got is that who has the best AI model? That was the question we used to ask. But right now, after this this transition, we are asking who can apply AI to real businesses, to real industries. This is moving from technology to actual business. A startup in China actually is using AI to create glowing plants. So these are some pictures of those glowing plants. If you could see the video, they basically that's how they make the plants glow. So instead of selling products, what they are doing is that they're selling the underlying technology, patents, and also the IP right. This shows something important. AI is becoming a production tool, not just a software tool. Now, let's talk about robotics. One major challenge is training data for real-world tasks. So companies are now building databases of human skills, for example, mapping hand movements, teaching robots how to assemble objects. And the goal is quite simple, is to let robots that can build other robots, and eventually that will reduce costs to almost iPhone level. But even with that hype, AI still struggles with real-world complexity, physical environments, and specialized decision making. That's why this shift matters, because the AI race is splitting into two layers. So the first layer, as I was saying, layer one is like general AI, like ChatGPT, those LLM. Second layer, so layer two, is the industry AI. So we're talking about real-world applications. And right now, China is focusing heavily on layer two. This changes how AI models, AI companies are valued. Before, it was based on model performance, but right now, it's based on actual revenue, actual numbers, actual real-world usage, and industry integration. This creates a new type of competition. So not open AI versus Google anymore, but more AI for finance, AI for logistics, or AI for healthcare. Each industry becomes its own battlefield. So the bottom line is AI is moving out of lab and into real economy. The focus is no longer how smart is the model. The focus is what can it actually do. And the companies that win this phase will not just build AI. They will own the entire industry powered by AI. And that's exactly what we're watching here on Roxom TV. So we'll take a short break from here. When we come back, we are diving into more geopolitical tension because tensions are rising and it's really affecting the market. We are talking about oil price, inflation, and also, of course, Bitcoin. So do stay with us after the break.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed. This sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising. The dollar's falling. That's the trick. Monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed two brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you, don't go!
This is Alex. Alex spends most of his time thinking like a trader. still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxom. One currency, one place.
How about stretch preferred stock on Roxom? Receive 11.5% monthly cash dividends paid in Bitcoin.
11.5% paid in Bitcoin? How is that possible?
It's real. Stretch dividends on Roxom gives 11.5% monthly cash dividends paid in Bitcoin.
Dang! I want everyone pitching Roxom to your clients. Corporate traders, asset managers, old, young, Stretch on Roxom is for everyone.
Now that's a birthday gift. 11.5% in Bitcoin.
We are in heaven at 11.5. 11.5%. 11.5%.
Welcome back to Roxom TV, and thanks for sticking around with us after the break. Now, let's talk about this, because this is not just another geopolitical headline. This is starting to hit oil price, inflation rate, global markets, and of course Bitcoin. And the situation, geopolitically speaking, is getting more serious by day. So this new report shows the US Special Forces are now moving into the Middle East, including elite units like Navy SEALs and Army Rangers. And here's the key point. They are not being, they haven't been assigned specific missions yet, but they are there to provide more options for military action. What this means is that this is preparation. At the same time, Donald Trump is talking about taking control of Iran's oil resources. Iran, on the other hand, of course, is not backing down. They are saying no direct talks with the US. US proposals are extreme and unacceptable, and more importantly, they are demanding full control of the Strait of Hormuz, so being this very narrow waterway here. So the Strait of Hormuz is one of the most critical oil routes in the world. Every single day, a huge portion of oil passes through the strait. So if Iran controls it, they control supply, they control pricing, and they control pressure on the global economy. And this is not just a negotiation point. This is a leverage. We are already seeing the retail impact in the market, the real impacts in the market. For example, like oil prices jumped from around $70 to above $110 at one point. Of course, that is the crude oil. We have to switch to Brent oil. And as for the US bonds, it is rising. Stocks are failing, so it's falling to a new low that we haven't seen in a while. So if we quickly hop onto the S&P 500, looking at the charts, we are on the weekly charts of S&P right now. And if you count, so 1, 2, 3, 4, 5, 6. So 1, 2, 3, 4, 5, 6. So 6 consecutive weeks of downward movement. So that is a lot from the S&P 500 standard. And if we take the top to a low, that is 9% in just like 6 weekly candles. So that's very concerning for the entire US stock market. And Bitcoin, it dropped to around 65K before bouncing back up. So this is really moving the market. Here's something most people is missing. So just a few weeks ago, markets expected rate cuts. Now, the market is starting to price in possible rate hikes. So if we take a look at Fed Watch, so the next Fed meeting is going to be late April this year. So people are saying that, okay, 97% of people at least think the rate gonna be unchanged. So like the narrative before Jerome Powell is that whoever replaced Jerome Powell would bow to Donald Trump and would cut rates, but looks like right now it's not the case, because like the Fed, even the Fed chair can't decide the ultimate result. It's not like a one-person job. So even like whoever replaced Jerome Powell, looks like it's Kevin Walsh, that is very limited stuff that he could do when it comes to rate cuts. So this is what we're pricing in, like an inflation. It forces central banks to stay tight as well. Now, here's the dangerous part. This may not be a short conflict. Some analysts are already calling this a potential fourth oil crisis, because right now, this is not just about one country. This involves the entire Gulf region, which holds a massive share of global energy. Iran is also using proxy groups across Lebanon, Iraq, and Yemen. We covered that on yesterday's show. And this allows them to apply more pressure without direct confrontation, which makes the conflict harder to stop and longer lasting. If things escalate further, not only the Strait of Hormuz, but also like the Red Sea shipping would get disrupted. So that means two major trade routes would be impacted, and that would shock global trade, push oil even higher. So what we're seeing right now is that Nasdaq entering correction. S&P, as I was covering a minute ago, is on like a 6 consecutive week of downward movement. Bonds, so bond yields rising toward 5%. This is not panic yet, but it's building pressure. But at the same time, if we hop onto DXY chart, like of course, it's a measurement of how strong is the USD, US dollar. So right now we're sitting at 100. So like the general trend, obviously speaking, is like an uptrend. So we have been an uptrend since late January 2026. So when we have like geopolitical tension just keep rising. Right now, institutions, big money, they don't want so-called safe haven asset. They're not looking for gold. They're not looking for silver, and definitely not in Bitcoin. Like it broke my heart for saying this, but like based on the data, based on the charts, what I'm seeing, it looks like institutions, what they want is the ultimate so-called safe assets like cash, like USD. So that's the explanation why DXY has been going up. So we dropped to a low of $95. That was back in late January. And right now, like we pumped over 5% in a matter of 2 months, like a little over 2 months. So that again showcase this is like panic building. Like institutions are feeling the uncertain time. They don't want very volatile asset. They just want to hold cash. Right now, everything comes down to like, does this become a long war? Because like if it is a short war, then it's just like a temporary shock, end up being the best time to ape in the market a little bit. But if it's turned out to be a long war, then it's going to be a structural shift. The bottom line is, this is no longer geopolitics. This is about energy, it's about inflation, monetary policy, and market direction all tied together. And the key question now is, does this stay contained, or does it turn into a prolonged global energy crisis? Because if it's the second one, this will reshape market for years. And that's why we are paying attention here on Roxom TV. Okay, let's shift gear a little bit, and I do want to dive into the next story. So, what we're talking about here, like something big just happened in TradFi. So within 48 hours, the 3 biggest US exchanges all made moves into blockchain. So the exchanges I'm talking about is Nasdaq, New York Stock Exchange, and also the CME Group. And all of these are now pushing into one idea, being tokenization. This is not a crypto startup experiment anymore. This is Wall Street upgrading its core system. So each of these exchanges focusing on a different part of the financial system. So for example, Nasdaq, they focus on tokenized collateral. NYSE, they focus on tokenized securities. CME, on the other hand, they focus on tokenized cash. So together, they are rebuilding how assets are used, how trades happen, and how money settles. And this happened to be a full system upgrade. So let's break it down, each one of these exchanges. So let's start with Nasdaq. Right now, there is a big problem in finance, is that there is a lot of liquidity, a lot of assets are stuck. So stocks, ETFs, bonds, they sit in accounts that cannot move fast. Nasdaq estimates around $35 billion of collateral is basically sleeping. This is because of settlement delays, because of bank transfer limits and time zone issues. So even though the assets are very valuable, they are not being used efficiently. So what Nasdaq is doing right now is that they are working with a company called Talos. So they are building tokenized collateral that can move instantly. So instead of waiting hours or days, institutions can move assets in seconds and meet margin requirements immediately. So why this matter, you may ask? Like actually in a very volatile market, speed does matter. Like if you cannot move collateral fast enough, what you end up getting is that you'll get liquidated and you'll lose your position. But with tokenization, assets become active, not passive. One asset can now be used in US market during the day and in Asian markets at night. Same asset, multiple users. So this is a huge jump in capital efficiency. And this is moving markets from T+1 settlement day. So what it means is like the transaction plus 1 day. That means the next day. So from T+1 settlement to real-time settlement, that is a massive shift. And now let's move on to the NYSE, so New York Stock Exchange. And what they're doing here is even more fundamental. NYSE is working with a company called Escalates, and their goal is to create tokenized securities directly on blockchain. This is not like crypto exchanges offering stock tokens. This is actually much deeper than that. We are talking about native tokenization, meaning the token is the stock, not a copy, not a wrapper. So NYSE, how the system works is like the ownership is recorded on the blockchain. Investors hold tokens directly, and those tokens represent real legal ownership that includes dividend, that includes voting rights and shareholder rights. This completely removes layers because right now, when you own stocks, there are brokers, there are custodians, and there are the clearing systems. But with tokenization, ownership becomes direct and settlement becomes instant. These systems, however, there's still risk because it depends on accurate pricing and reliable infrastructure. So if something goes wrong, token price could disconnect from real stock and that could trigger forced liquidation. So the system is faster, but also very sensitive. Now, let's talk about the third one. So the only one left is CME Group on our list. This is the world's largest derivatives market, derivatives exchange in the world. The focus is not assets. The focus is actually money, so tokenized cash. In trading, especially futures, you need cash for margin and you need it fast. But here's the issue. Banks are not 24/7. Markets are now becoming 24/7, even in the TradFi world. So when volatility hits, you may not be able to move cash in time, and that leads to forced liquidations. So what CME is launching right now is they're trying to do tokenized cash, working with Google Cloud or bank partners. They are creating digital version of US dollars inside a permission blockchain system. Now, institutions with this combination, they can move cash instantly and meet margin calls anytime, even when banks are closed. This reduces the liquidity risk. This would reduce the system stress and also chain reactions in crashes. So all of these exchanges, like why are we covering this? But if we put all of these exchanges, what they're doing, so Nasdaq is trying to move asset faster. NYSE, the ownership would become more digital, while CME is trying to make money more programmable. This is not three separate stories. This is one system being rebuilt. Now, what does this mean for crypto or for Bitcoin? Crypto is not replacing Wall Street. Like we're talking about tokenization here. Like Wall Street is adopting crypto infrastructure, but doing it in a controlled manner. It's more in a permission systems, like regulatory compliance and institutional grade setup. So this transition is really powerful, but definitely not risk-free. So there are still potential issues. We are talking about smart contract bugs or network failures or systems integration risk. And because these systems run 24/7, problems can actually spread faster. So the bottom line is Wall Street is not ignoring blockchain anymore and is rebuilding itself on the top of it. This is not hype, this is infrastructure. And the key question now is, does this stay inside traditional finance or does it connect with open crypto markets? Because if these two worlds merge together, that could completely reshape global finance. And that's why we're paying attention here on Roxom TV. All right, so let's shift gears a little bit and let's go to something more chill. There's a chill story in every single show, I hope. So something small just happened, but the reaction was huge. Elon Musk just posted about Bitcoin again, and this time it went viral instantly. So what it started is that this is a simple request. So a user on Twitter or X asked Elon to animate an image. So if we go to the thread, so Elon posted an animated image, and then this person asked Elon to animate it. So Elon actually replied. So the image feature an anime style character, of course, like with a Bitcoin logo at the back, and also I believe she is wearing a Bitcoin dress. So Elon replied almost immediately. He said, "Here you go," and that was it. And within minutes, the Bitcoin community picked up. The post absolutely exploded, and right now they have like 12 million views for this like animated image. So massive engagement across the crypto space, because this is not any user. We're talking about Elon Musk here, the richest man in the world, one of the most influential voices in tech, and someone who has moved markets before. So even a simple post like this carry weight. This is not Elon's first time hinting about Bitcoin, actually. So in the past, Tesla bought Bitcoin. Elon has tweeted about crypto multiple times, and his posts have triggered major market reaction. So every time he mentions Bitcoin again, people pay attention. Now, here's why it gets interesting, because Elon is preparing to launch X Money, which is a payment system inside X, expected to roll out soon. So the question is, will Bitcoin be integrated? Because if it is, that could bring crypto into a massive global market, a massive global platform with hundreds of millions of users. But let's be clear, there's no confirmation in this post. I mean, it is a really simple and basic post. It's just an animated picture here at the end of the day. So it doesn't confirm anything. There is no official integration, no product announcement, no roadmap update. But what it does, one thing is that Bitcoin is still very much still on Elon's radar, and that's why we are paying attention here on Roxom TV. So we will take a short break from here, but when we come back, we have a very special guest joining us. So Mamadou, who's CEO of Ubuntu Tribe, will be diving into how tokenized gold works, where real-world assets are heading, and how blockchain is actually being used to expand financial access globally. So if you want to understand where the future of money is really going beyond just speculation, you won't want to miss this. So stay with us. We'll be right back.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick. Monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Fuck. Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin?
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you, don't go.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxom. One currency, one place.
How about stretch preferred stock on Roxom? Receive 11.5% monthly cash dividends paid in Bitcoin.
11.5% paid in Bitcoin? How is that possible?
It's real. Stretch dividends on Roxom gives 11.5% monthly cash dividends paid in Bitcoin.
Dang! I want everyone pitching Roxom to your clients. Corporate traders, asset managers, old, young, Stretch on Roxom is for everyone.
Now that's a birthday gift. 11.5% in Bitcoin.
11.5. We are in heaven at 11.5. 11.5%. 11.5%.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxom. One currency, one place.
Oh, I forgot to mention, dividends on Roxom are paid in Bitcoin. Stretch your income, 11.5% paid in Bitcoin.
Stretch your income to 11.5, get 11.5 in Bitcoin and Roxom. 11.5%. 11.5%.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxom. One currency, one place.
Oh, I forgot to mention, dividends on Roxom are paid in Bitcoin. Stretch your income, 11.5% paid in Bitcoin.
Stretch your income to 11.5, get 11.5 in Bitcoin and Roxom. 11.5%. 11.5%.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick, monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed two brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Welcome back to Roxom TV, and thanks for sticking around with us after the break. Now, you've been following the conversation today. We have been talking about a lot about how financial system is starting to change from tokenization to new forms of money to how assets are being used in the real world. So this next segment really brings all that together. Joining us today is Mamadou, who's the founder and CEO of Ubuntu Tribe. He has over 20 years of experience in finance with a background at firms like KPMG and BNP, and he is now focused on expanding access to global capital, especially through tokenized assets like gold. What makes his work interesting is it's just the theory, it's about real-world application, real-world impact, how people can actually access, store, and use value in a more open and flexible kind of way. So today we're going to break down how tokenized gold works, what it means for financial inclusion, and how this fits into the bigger shift that we're seeing in global finance. So Mamadou, it's great to have you. Welcome to the show.
Thank you for having me. It's a pleasure and an honor.
Yeah, I mean, I have to say I'm very looking forward to this conversation and hosting you today because, I know you've been recognized by Forbes and the World Economic Forum. So I do want to dive deeper into your background, into the company that you've built. And you mentioned something like Ubuntu is like I am because we are. I do want to get into the background and why did you say that? Could you maybe bring us to square one? Why you have this basically idea of building this company?
Yes, thank you very much. So basically, yes, Ubuntu means I am because we are in a sense that no human being exists in isolation. Actually, we exist through others, right? And as such, we need to always take into consideration the whole versus only the individual in isolation. So within that context, if you look at global finance, it has created a massive gap, right? From financial exclusion to poverty trap or debt trap, that creates some form of division in terms of limiting access to opportunities for those who have not, right? And by calling our company Ubuntu and applying Ubuntu as this ancient African philosophy that reminds us that our humanity was to bring back a sense of humanity into finance, humanity into giving people the potential to fully realize their potential, to fully giving the opportunity to people to fully realize their potential by allowing them to access financial freedom. And for us, when the finance world for a century or more has been based by the principle of scarcity. And we believe if you go back to the very intrinsic sense of the human principle, Mother Earth actually gives us things in abundance. So was to restore the principle of abundance as a birthright to any citizen in a context where you have the very few and the have-nots, if I may, So by tokenizing gold, we go back to the very essence of that philosophy and say, okay, what if we could make gold, which has had value across civilization, across human history, regardless of geographies, available from as low as 10 cents to anybody mobile phone, right? It has its primary value. Gold gain, since 2000, probably 1,300%. More than 8,000% since over the past 50 years, in a context where most currencies almost have lost value, especially in emerging markets in Africa, in Southeast Asia, and Latin America. And by restoring the possibility of people to buy gold at the lowest denominator, 15 cents, 20 cents, less than $1, basically, you restore that opportunity for people to effectively build their savings regardless of their government policies, regardless of the global financial climate, because over time, gold has never disappointed in terms of safe haven, in terms of real value. And it's also something that everybody knows. Not everyone is familiar with crypto. Not everyone understands Bitcoin, but everyone understands gold. Why? Because they would have been exposed to jewelry or anything like that. So for us was to, okay, let's bring things back to the very essence principle. And the global financial system for a very long time was backed by gold because that was the one thing that anyone on the planet trusted. And that principle was removed. We're bringing it back in a decentralized way, available for all. In the context of Together We Rise.
Yeah, that sounds very interesting. And there are a lots of impressive idea, like some words that you throw out, because you mentioned like bring back humanity, and there are like a lot of assets in this world today were supposed to be free, like gold, because like this Mother Earth just happened to give us this asset. So I do have a lot more follow-up questions regarding that, because like for your background, you actually come from the TradFi world, like you worked at KPMG, BNB, for example. So like, is there a certain reason that you saw from your TradFi world that lacked of humanity, or some morality reason that made you leave TradFi into building your own company, into building what you're doing, like tokenized gold and Ubuntu Group?
Thank you. Yes. Look, the major issue for my view, in my experience, right? So I was of course with the World Bank. I was managing director for GE in charge of investment and project finance. And the one thing that was, a big issue was that you had, it was extractive. Finance had a very extractive nature. And it was very important for me to kind of restore a model where finance would be an engine for wealth distribution versus wealth extraction, right? And it started with understanding that you had an issue with financial literacy, first of all. So if you understand finance, it's based on two key principles, right? One is asymmetry of information. Most people, if you look into the finance world, is that I'm gonna buy this asset on the stock market if I understand that it's gonna have value, or have information making me believe that it will lose value. Then that's one aspect of asymmetry of information. The other aspect of asymmetry of information is when you look at the system as it is. When you want to lend money, for instance, right? That's why you have the concept of junk bonds. So basically, if that environment or that country or that region appears risky or a project appears risky, you're going to price your risk by expecting higher returns, right? So it means that because of the shape of whichever investment or project, because of its weakness, you're making it weaker by extracting more in terms of expected returns. So that's asymmetry of information. The other key element that we should bear in mind in that context is the what you call collateral. You cannot basically, without a collateral, it's very hard to thrive in finance, right? That's why people, get Bitcoin LTV and all those assets. It means that if I'm going to lend you money, what do you give me in guarantee? Your car, your house, the shares of your business, etc. Right? So if you don't have the right information and if you don't have collateral, then literally your chances to survive or thrive in finance are very limited. And that is what created financial inclusion in the first place. Because when you think of it, the poor or the middle class who is struggling for paycheck to paycheck doesn't necessarily have all the financial literacy to understand stock, bonds, or crypto, right? That's one thing. Or they don't necessarily have a Bloomberg terminal. And having a Bloomberg terminal is expensive, right? And even less so, they don't have a collateral because they have very limited amount of savings. So how do you address that? That's why we say we need to shift from financial inclusion actually from the concept of financial inclusion to the concept of financial mobility. How do I make finance work for everyone? And for that, it starts by providing the right level of information, right? And second, more importantly, collateral. But not everybody can afford even a gold bar, right? You're talking about $130,000. Not everybody can do that. But what if we fractionalize gold using blockchain technology and make it available from as low as 10 cents to anyone with a mobile phone? And in that context, that's where you start changing and creating a finance that works for everyone. So, and that was my shift from TradFi, in the sense that also, of course, I was aware of, an environment where, there was a frenzy of printing, dollar notes or euros or in many countries, which was leading to, of course, some form of war. And we can see it, with this large de-dollarization campaign where central banks have been buying they've been buying over the past decade more gold than they bought over the past 60 years. I don't know if you realize. So they know something we don't know. And I want to make sure that people also can benefit from this understanding. Even if they don't have the information, they at least can get the asset, because some things are evolving, the financial system is changing, and we're going back to asset back. If you look at the BRICS, for instance, right? The BRICS digital currency has been announced, going to be 20% backed by gold and the rest with other commodities. Why? Because you need something that people can trade, exchange, and have a common understanding of value. And living TradFi was also for this, because the future of finance lies in, and you can see it today. I remember people thought I was crazy, right? It's like you would have a situation where everyone was everyone was wondering, why are you leaving TradFi? Why are you doing that? Because it works. I said it works, but I'm not sure it's going to work for long. The future is about tokenization, right? And you now hear Jamie Dimon, you hear from JP Morgan, you hear Larry Fink from BlackRock. All of them are going into tokenization. So all those people I was discussing back then, now maybe they've seen, they've seen the light. But it's been there for a while, and I salute Bitcoin and to opening this principle of decentralization. And it was also, when you look at, the 2008 crisis, and the too big to fail and so on, was already pointing to a direction that the global financial system needed to evolve.
Yeah, that certainly makes a lot of sense. But I do want to take it a step back because you mentioned Ubuntu, for example, now that users can purchase this like tokenized gold at 10 cent. What do you mean by at 10 cent? Like, because as I'm looking at the gold chart right now, is basically trading at $4,566 an ounce. So 10 cent, like, is it by a tokenized version, a portion of that? That's why they paid 10 cent, or what do you mean by that phrasing?
Yes, so our gold-backed token is basically backed by physical gold. It's called GIFT, Gold International Fungible Token. And within that context, what it means that one bar of gold, right, which is worth today at $130,000. So GIFT, Gold International Fungible Token, it equals to 1 milligram of gold, right? So it's not 1 kilo, it's 1 milligram. So it's 1 millionth, right, of a kilo of gold, and it's equivalent to 13 cents today, of 13, 14 cents, right? It means that it's backed 1-to-1 by gold, it's audited, it's insured, and it sits in highly regulated vault. So you fractionalize the 1 kilo into 1 million pieces, into 1 million token, so that people can buy 1 token, 10 token, 1,000 token, 100,000 token, based on their means. You can think of an apartment, right? In an apartment, not everybody, for instance, can afford $1 million value apartment, right? Even if it's in Hong Kong, in Dubai, or in Manila, or in Rio. But if you fractionalize this apartment of let's say 1 million pieces, right? Then you can have a piece of that apartment for $1, right? So let's say if it's 10,000 square meters, for instance, then you would get a square meter literally for $100, right? And that's the big difference. And everybody, that's what blockchain allows. It fractionalizes ownership and is directly linked to the underlying asset. And we do the same with gold. And you can redeem your gold, claim it physically, and it gets shipped to you at your address based on KYC. And that's what it changes everything, because now you have a digital certificate of gold ownership that really allows to trade, transact, and you can send it, you can you can transfer it, and it can be also divided into smaller units, and you keep some, you send some to your family, and then it appreciates over time because it's pegged 1-to-1 to the price of gold in the market.
Yes, that explanation definitely helped a lot in terms of how tokenized gold would work and how to help individual. But I kind of want to circle back because the idea of you building Ubuntu Tribe, it was to basically bring humanity back to finance. But like if people they are just buying a tokenized version, just a portion of that gold, basically how do you help people? Because you talk about the extractive nature in finance, for example, collateral. So basically, buying a smaller piece of gold. How do you help people with your company?
So the way we help people with our company is basically through first we pay our employees in gold. Now think of this, right? We pay employees in gift. So gold international fungible token, we pay them in tokens for the equivalent of their salary. So where you have a major difference is the following. Gold last year gained 70%, right? So basically our staff made a salary increase of 70% last year without us having to pay them 70% more. Right? Now, when you in a country like Nigeria, for instance, that lost I think 200% to the dollar, but against gold, it lost 800%. Why? Because in 5 years, the dollar lost 140 up to early this year, 140% to gold. So gold holds value. And just to give you a sense, right? If you bought a Mercedes in the 70s, you would have paid roughly, let's say, 1 kilo of gold. It would have, and back then it would have cost you, I don't know, $20,000, right? If you had bought the latest Mercedes in the 90s, it would still be valued 1 kilo of gold, right? And then it would at the same time be worth $80,000 or $60,000. Today, if you buy a Mercedes, right, it would be still worth a kilo of gold, but you would have to pay $130,000 for the latest one. You
Yeah, that was
understand
a
the
really good
difference it makes
example
for
that you.
people? Sorry?
Yeah, that was a really good example that you just gave out because, like, you are paying gold to your employee, and that was a really interesting point. I mean, I wish I got paid in gold as well, but like, so speaking of
Feel
which,
free to
the
join
gold
us. Our employees,
price.
our team is very happy to be paid in gold.
So speaking of gold price, because like it is really volatile. You gave an example that okay, basically the salary increased by 70%. But like ever since the top that we witnessed in late January, gold has been correcting and down quite significantly. So right now it has been down like from a top to a low that happened back in mid-March. So that was like a 26% down. Like I wonder if like the employees that you have, are they complaining or they basically see the long-term value of gold so they have no issue with the short-term volatility?
Yes, I love this question because we had that conversation with our team, right? So think about this, right? So you get paid a certain dollar amount in gold, right? And of course, what we encourage people to do is to use what they need for their normal lives and spendings, and to keep as much as possible in gold, right, as a savings. Now, guess what? If you get paid, let's say, let's use for let's say $1,000 or $10,000 worth in gold, right, last month, right? And let's use $1,000 as an example, right? And then the following month, and the gold was let's say at $150. And the following month, it means that you would get roughly 6 kilos of gold last month, right? Because gold was at if it's $1,000, you get 6.3 or something kilos of gold. Now the following month, gold collapsed to $100, right? What happens? Instead of getting for your $1,000 salary, it means that instead of getting 6 point something like you got last month, you're now getting 10 times, which is because it's you're getting 10 times with which is instead of 6 point something kilos, you're getting 10 kilos. So you're getting more gold when the gold price goes down, right? And I took actually it's not in kilos because of course if you take 6 kilos, it's $1 million, but you just divide, so it's in grams in this case, right?
Yeah,
But
that makes a lot of sense. I'm sure the employees understood the idea, like basically the company is on par to the market value basically on that day of the salary payment giving out. So at the end of the day, they are not losing value. It's kind of guaranteed to go up because of the scarcity nature of gold. So speaking of this like scarcity nature, it kind of aligned with Bitcoin fundamentals, so so-called digital gold. I wonder if you prefer gold over Bitcoin, or is there any stance, any take on Bitcoin that you have?
Look, first of all, I'm grateful to Bitcoin. Let's call the spade a spade, right? Because Bitcoin is the reason why we all here when it comes to the Web3 community, right? And in that sense, we had a very is the fundamental for decentralized finance, right? And we should acknowledge that. Now, when you compare gold and Bitcoin, of course I'm a big fan of gold because of the historical value, the shared value, and so on. But I'm a strong believer in Bitcoin, not just for what it allowed in terms of this industry to emerge, but also because of its actual role as store of value, right? It's decentralized. It keeps it preserves anonymity and all those parameters that are so important for the Web3 community. But at the end of the day, if you look at the crypto market today, which is still 60% led by Bitcoin market cap, it's what, 3 trillion, 4 trillion? The gold market cap today is around 20 trillion, right? Depend on the fluctuations, 17 to 20 trillion, right? So the value of gold, it's hard to deny. And look, we're dealing with a huge crisis today, right? Like the war, it might expand. So in times of crisis, when electricity grid gets attacked, where internet lines get attacked, you're going to tell me, okay, maybe Bitcoin could be at risk, right? Now, you could say also, since GIFT, our Gold International token, is tokenized, it also could be at risk. But here is the big difference, is that in our case, right, with the gold, it physically stored somewhere. So if things go south, you know that you can go, push come to shove, like they say, go and collect it in a safe location when things get better. And that resilience in these days, that's why people fly to safe physical asset, because in times of stress, you need that. And I'm going to give you also another example, right? Did you know that the most advanced elite troop, since it's a context of war and trouble, etc. Did you know that they give to their in the survival kit of their elite troops 1 ounce of gold? And do you know why? It's very simple. It's because even if you get thrown on a plane and land in the Amazon forest or somewhere in the Congo Basin or somewhere in the desert, that ounce of gold will bring you back home. And it makes
I mean,
a
I did not
major.
know that. That's something, yeah, very interesting for sure. Well, so speaking of the gold and versus Bitcoin, one thing people like to compare is also silver because, like, in the past year performance, I mean, if we don't include the past 3 months, but like speaking from 2025 to 2026, at the very least, gold had an exponential growth, like as you mentioned, like 70% increase for the salary payment for the employees. So another asset that people like to compare is it happened to be silver, and silver had an even crazier run between the same period, so 2025 and 2026. So, in your opinion, where does that leave silver? Silver versus gold. Do you have any hot take for that?
Yeah, okay. So definitely both are complementary. We're launching actually a gold-backed silver, I mean, a silver-backed token. What is interesting with silver is that it has very similar volatility profile as Bitcoin, right? But for very different reasons. So gold has a steady growth over years, decades, centuries, right? Silver is more volatile, but has been skyrocketing, right? Even if recently with the war, it readjusted. And the reason is simple, is that there's a huge, massive shortage of silver in around the world. India, we're talking about a shortage around 230 million ounces of silver that are needed. Why? Silver has a much bigger industrial use than gold. You use it for electric vehicles, solar panels, technology industry, military industry. It has been put, even by the US and Europe, among the critical minerals. Did you know that in a Tomahawk missile, for instance, there is 16 kilos of silver, right? India increased last year the need for silver by the silver import by 44%. And with war or not war, you're going to need electric vehicles, right? You're going to need solar panels. And that demand is not here to stop. And the big problem, what is creating is that it's driving the prices up, right? And what is also interesting is that the silver paper market is significantly over encumbered, much more than gold. And that's why you have a gap today between the Shanghai Metal Exchange and the COMEX, right? If you look at the Shanghai Metal Exchange, the price of silver is much higher than on the COMEX. And you know why? Because the Shanghai Metal Exchange gives physical delivery. So people would prefer to go to a market where they can get the physical silver because they need the physical silver for the economy to run, right? When you have a market with a lot of paper silver, and people are talking about over encumbrance from 50 to 100, 200, the numbers can go wild, right? But then when you have something like that, people go back again to the very physical element. And we tokenizing physical silver back one to one, which is Silver International Token, that will be bringing on the market, but also for the people to be able to get something that has high rise and similar profile like Bitcoin. Now, another very important ratio to understand, the historical ratio between gold and silver was around 16 times. For 1 ounce of gold, you historically would get 16 ounces of silver, but that gap has widened massively, right? So today, it's actually roughly 40, 50 times, 40, 45 times the ratio. So the trend would be for that ratio to close. So there's a big gap between 40 times, right, and 16 times. So people shouldn't be surprised if the price of silver in the near future gets multiplied by 3.
I mean, a lot of investors of silver would be eager to learn that. You just made that statement for sure. But like, I do have more follow-up questions. And speaking of tokenized gold or silver, that happened to be another product that Ubuntu is offering. So like, another question people like to ask, like, how do we ensure there is actual backing? Like, where is the transparency of the company? Because like, one thing about trading gold on the market, trading future contract, every 1 ounce of gold that happen to be maybe dozens of paper claims. So that is kind of like some dilution problem. So like when it comes to tokenized gold, how do you ensure everything is transparent and everything is trustworthy?
It's a great question. And that's exactly why we started this business, because we were not sure that everything in the market was transparent and trustworthy, right? Our gold is audited by the #1 digital asset audit firm in the world. Plus, beyond that, beyond the physical and digital reconciliation, which uses blockchain, we cannot, within our system, and our smart contract is audited, we cannot issue more gold token, more gift token, than the actual reported volume of gold issued. We're one of the only ones who have a one-to-one backing and who can proudly say it's audited, insured, and stored in some of the most regular, the safest vaults in the world, in Switzerland, Stuttgart, Copenhagen, and we have partnerships also in Dubai and in Singapore, right? So that for us was the first principal condition. Why? Because we know the big issue, and that's why you hear about gold squeeze or silver squeeze, is because a lot of the gold out there is paper gold, meaning you have an ETF and you get lured into taking the cash into the gold because actually there's not even enough gold to pay for all the paper that were issued. So that's why when I hear people tokenizing it gold ETF, I'm like, oh, really? Okay. And when I see some other gold-backed tokens that says whatever gold with their name, but the underlying assets is actually a bit of gold and a lot of paper gold. And you can't redeem, or it may make it very hard for you to redeem, because indeed the gold is, I don't know. So we are back 1-to-1. So you can claim your gold at any given time for a minimum amount, of course, so that it's economically viable for you. But we talk about, 10 gram, 20 gram, and we ship it to you. So that's the big differentiator that people are now starting to realize, is that it's not because you have gold linked to your token that it's back 1-to-1 by gold and it's actually real gold. And the beauty is the SEC right now just released, and it cleared us, right? And it cleared everyone who actually playing fair and transparent. As you know, now Ethereum, Bitcoin, and so on are considered as utility and not security, right? We are considered as commodity, right? Why? Because we backed 1-to-1 by the underlying asset, and people can take delivery of the underlying asset.
That is great reassurance for the investors, and definitely for gold or silver investors who maybe want to look into Ubuntu in the future as well. So, like, speaking of gold, I kind of want to get your general take about the market and where possibly gold would go maybe in 2026. So, we hit a record high level in late January this year. Right now, it's down significantly. But like one thing I find it very interesting is that geopolitical tension is definitely rising. We are on the edge of World War III. But like after seeing all these news, like gold is down for the past 3 months. So like basically what's your take on this dynamic? Because I
It's
thought gold is
absolutely,
so-called safe haven asset.
it's absolutely normal. And I told that to everyone who asked me, and I discussed that. You're going to see that at every time of crisis, it happened in 2008. It happened in 1989, 1988, and it's happening again today. And the reason why gold is down is what happens when everything collapses? You sell your gold to hedge your position, because that's the one thing that had been gaining, right? So people are hitting liquidity crunch, and they have to sell gold. Remember, you talk about an asset that gained 150% in 5 years and 70% just last year. So when you look at all your position and, these stocks are collapsing, those stocks are collapsing, those bonds are not doing well. Oh, what did well that I can sell to cover those positions? So you always have that as a phenomenon at the beginning. And it's been very standard, right? And same for silver, which also got a bit of a hit. It's even more so in this context in the United States, because when you look at how would I call that, the private credit market, right? So I think BlackRock, JP Morgan, I think it was Blue Owl or Blue something, who couldn't do redemption, right? So you're starting to see the cracks in the system. And the cracks in the system, it's pretty obvious right now, is because after the 2008 crisis, it was the bank's balance sheet were severely dry, and the regulation with Basel II, Basel III being, pushed forward, called for banks, they couldn't use their balance sheet. So the 401ks and people private money were deployed to boost economies, businesses, right? We're talking about $2 trillion. So now the problem is, if you start giving 9-10% return, you have to give return to attract private credit. But it means that the SMEs and the companies who are going to receive it, if I'm a high-performing company, why would I pay that much expensive money? I'm going to go and look for it in a bank somewhere else, right? But if I'm not so performing, again, remember, asymmetry of information, risk perception, I'll take the punch and pay high interest. But it means that down the road, most of the companies in the portfolio have a lot of bad performing loans. And it's been accumulating. But what happens when the private credit investor starts seeing war here, oil price there, is wants to go run to the bank to withdraw the money. And the bank in that case was not the lenders. I mean, even if they lent a portion, where they made a lot of money were on fees, on brokerage, setting up all the structuring. But if everybody now goes to run to the bank and you have a bank run, then they're going to stop and block redemption because it's hard to honor. But you still need to honor a bit of it. So you're going to sell a lot of your other
No, I think
positions,
there's
so you
some
get
connection
cash.
issue
People run
here
to
on my
cash
end.
in times of crisis.
Do let me know
So
if
you're also going to
you
sell a
could
bit of
hear
your gold
me
and your silver.
over
So that's
the
where we are now.
microphone.
And it's going to continue. I think before we stabilize, right? And the Fed is announcing that they'll keep the interest rate until December. They don't plan to change it. Let's see after May with the new head of Fed if they change or not. But the Federal Reserve now is
Anyways, we
gold
are
follows a
almost
lot,
towards the end
right?
to the show. Actually,